All right, let's try this. Okay, let's see if everyone has it gone out? Has it gone out? Has it gone out? All right, and we are live. We are live. Discord. Let me know whether anyone's here. Whether the link's working. Mic check. Mic check. I haven't done a live in a minute actually. Okay, is anybody here? Let's have a look. Is the link working? Is anybody here? Let's have a look. The Discord. Has it gone out? Anybody here? Okay. We have some elite members. Cool. Thank you. What's going on, guys? What's going on? Happy new week, everybody. Bav, welcome, brother. Matthew, welcome, brother. Sukjit, welcome, brother. Appreciate you guys. Sound is good. That's the main thing. Let's make sure the sound is on point. No echoes, nothing. And we will get started. So, guys, make sure you get your pen and notepad. It's going to be a juicy one today. We're going to do some fundamentals. All right. So, for the past three video lessons, it's been all technical. So fundamentals, I think, in my opinion, is more important, especially for long-term investors. And obviously, if you're day trading or swing trading, it's a different story. But fundamentals are crucial to long-term investors. Hey, how you doing, brother? Oskire, welcome. Josh Phillips, appreciate you, brother. Hey, looking good for looking for the yeah. There you go. Cheers, thank you, brother. Looking forward to this one. It's gonna be lit. It's going to be lit. Okay. So, Connor, the story is today we are focusing on fundamentals. I'm gonna make this a 3-part series where we look at the financials of a company. So, with the financials, you're looking at the income statement. As you can see here, the income statement. You've got the balance sheet, and you also have the cash flow statement. So this is not necessarily the sexy part. This is not the sexy part of investing, but it's the most crucial, and it's something that most newbie investors overlook. They don't want to spend time looking through a company's balance sheet. Whereas for me, the balance sheet is probably it's the first thing I look at in any company. I look at the balance sheet. So how you doing next? Welcome, my brother. Welcome, Jens. Appreciate you dropping by, my bro. Appreciate you, brother. Muhammad, appreciate you, bro. You're here. I missed you too, bro. I missed you too. It's been a while since we've done a live stream, but we are back. Wait, I'm gonna count. Hey, Regini, welcome. Connor, you're here. Yep, love a good balance sheet. Okay, so we're gonna give probably 2 more minutes, and it's Rocket Mohammed Rahman. Why have you changed your name, bro? We only know you as Pocket. We're going to give 2 more minutes for people to jump on, and then we are going to crack on, okay? But yeah, so try and read one at least a couple times a week. Yeah, Connor, I try to do that as well. But hopefully this website should make it a bit easier for you, because obviously you can go into a company's 10K and look at their annual reports. Why is this not loading? Yep, there we go. You can go into a lot more detail. But what I'm going to do with this is just show people my process. So if someone puts a stock on my watch list or asks me to look at a company, the first thing I look at is their balance sheet. If they haven't got a solid balance sheet, yeah, the story might be good. And again, remember, this is long-term investing. So if it was a swing trade or a penny stock, wouldn't necessarily look at the balance sheet as much. But if it's a long-term investment where I want to put in a majority of my capital, invest a huge chunk, I want to make sure that the business is going to survive. Okay. That's very, very important. Now, I got about 1 minute left, and then yeah, Jen, so you'll be able to watch this back afterwards. Okay, so if you can't stay for the full session, it's absolutely fine. You can watch it back afterwards. My brother's Gmail didn't know I was logged in as him. So you're logged. I see. Pocket, it's weird seeing that name, bro. It's weird seeing that name. Hey, Adil, pleasure, bro. Thank you for dropping by. Hey, Soci Invests, welcome. Discord's been dead since the market turned red. Only serious players remain. Let's go. This is how we do. We eat when people are fearful, we are greedy. You get what I'm saying? So Matthew, I'm with you on that. Okay. So I didn't really. We're gonna make a start now. It's 5 past, okay, and then people can watch it afterwards. We're gonna make a start. So how I wanted to do this initially, I started to prepare a PowerPoint presentation, but then again, I don't want it to be death by PowerPoint. So I hate PowerPoints as well. So I figured, you know what? Let's look at the real world data. Let's look at a proper company. Let's go through it line by line. And, this is real world. We're not going to look at PowerPoints or whatnot. So this is real world. This is a balance sheet for Alphabet. So this is a balance sheet for Google. And the website I love to use when analyzing balance sheets is called macrotrends.net. So it's macrotrends.net. Simply go on Google, type in macrotrends.net, and then all you have to do is type in the ticker of the company that you're looking at. So let's say AMZN, Amazon. All right. So straight away, it gives you the option. You can look at the revenue, you can look at their gross profit, their operating income, income statement, shares outstanding, etc. So it gives you information straight away. So you can click on income statement, then it loads up the financials. Okay, so you're interested in the financials tab. And like I said, with the financials, you have the income statement, you have the balance sheet, and you also have the cash flow statement. So those three make up a company's financial statement. All right. And then you have the key ratios, which we will go into later. But if you're looking at a company, again, today we're focusing on balance sheet. So we're going to click on the balance sheet. And what it does, it brings up the company's balance sheet. So for this example, we're not going to look at Amazon. We're going to look at Alphabet, which is Google, because they are known to have one of the best balance sheets on the market right now. Okay. So yeah, so we're focusing on Google, and what I'm going to do, I'm going to go through it line by line, and again, this is the best balance sheet, and then I'm going to show you a terrible balance sheet. All right, so you put it into perspective, essentially. But yeah, we're ready to crack on. So let me know in the chat whether you've got your pen and paper ready. I've got my pen, I've got my notepad ready. We are good to go. Let me know before we crack on. Let me know. Okay, so Pocket's back. So that's what we're used to. Pocket Rocket. That's what we're used to, bro. So yeah, let me know if you're good to go, guys, and we will crack on. All right. Let me know, guys. Let me know in the chat whether you're ready to go. Where are you? I can't see. Are you guys chatting? Okay, it's all popping. I don't know why it's lagging a bit. So yeah, ready to go. Okay, cool. So the balance sheet essentially is made up of 3 sections. Okay, you have your assets, and assets is what I tell my son. Assets is essentially what puts money in your pocket. All right, so every business has assets, and you also have the liabilities section, and this is pretty much money going out of your pocket. That's the way I look at it. And then you have a split, which is the shareholder equity. Okay, so you started with the assets, started with the liabilities, and then you end with the shareholder equity. Now, for every company, the first line of the balance sheet is always to do with the assets, and it gives you information with regards to the amount of cash that the company are sitting on. So this is cash in the bank, essentially. This is how liquid the company are. Okay, and you have the cash amount here. And one thing that Peter Lynch always says to look for is you want to make sure that the company's cash year on year is increasing, is improving. Okay, so the reason why I like macro trends is because it usually brings up a chart, so you can easily see the bar chart here. And with Google, this is absolutely spot on. Year after year, you can see Google's cash position has been going one way since 2011, and it's been going up. Okay, so okay. Let's have a look. Are you able to zoom in a tiny bit, mate? Okay, let me zoom in. All right. Okay. Is that good? Is that good for you guys? Can you see a bit better? Let's have a look. Is that a bit better, guys? Can you see it? Let me know. I've zoomed in a little bit. Is anyone else struggling to see the screen? Can anyone else see the screen, or are we good? Let me know in the chat, guys, whether you can see the screen, whether it's all good. Okay, yeah, good. Okay, cool. Okay, cool. Apologies that it was a bit zoomed out. But yeah, so essentially, the first line or the top line of a balance sheet is your cash. And that's essentially the amount of cash that the business has. And again, all the cash, it's pretty much the cash that the company have ready to deploy if they need to make an acquisition and whatnot. And Peter Lynch always says you want to look for a company where the cash has been increasing year over year. And that's exactly what Google have been doing every single year without fail, even in 2020, amidst the pandemic, the COVID. They actually grew their cash position much quicker during the pandemic because obviously most people were using more ads and whatnot. But this is number one. Okay, has the company's cash been improving year over year? And the next part of the next line of the balance sheet is your receivables. And with your receivables, that essentially refers to the money that's owed to the business. Okay, so again, they class that as assets, and ideally you want to be seeing the receivables. And some balance sheets you see it as net receivables. So again, you want to be seeing that going up year over year, because again, it indicates, the balance sheet indicates the financial strength, the financial health, and also the survivability of any company that you invest in. Okay, you want to make sure that the company is not at risk of going bankrupt. And the only way to do that is to check the balance sheet. So again, is the cash improving year over year? Are the receivables, which again is the money owed to the business, has that been improving year over year? And that's essentially what you want to see. So next line you have is the inventory. And the inventory represents the value of the goods that the company have stored. So again, with Google, I wrote down here, they have like the Google Glass, or they have the Google cars, all of these, we regard them as inventory. And again, it's a good idea to see the inventory improving. Sometimes, in some cases, they don't account for the inventory on the balance sheet. But again, it's good to know that the company's inventory is improving year over year. Now, prepaid expenses and other current assets, businesses tend to use that interchangeably. So if you look at Google, for example, they haven't really had anything down for prepaid expenses, but they do for their other current assets. And then you can see from 2015, they had the value. I'm going to have to zoom down. Oh, sorry, let me go across here. So you can see from 2015, they had some value in the prepaid expenses, but they didn't have any value in the other current assets column. So companies tend to use that interchangeably, but what you need to really focus on is the other current assets. I'm going to zoom back. My apologies real quick to recent. And again, so these the other current assets are pretty much other stuff that the company owns. Again, and how do I word it? So I wrote down here that other things of value that the Google owns and benefits, all benefits. Okay, yeah. So my apologies, I lost my words there. So the other current assets are essentially other things that Google owns that they could potentially liquidate and convert into cash. Okay, so you have your total current assets here. Again, that's another line of the balance sheet that you want to see improving year over year. And the total current assets essentially mean this is how much Google can have if they were to liquidate, to sell all of their other current assets, receivables, cash in hand. If they wanted to liquidate everything, this is the value that it will be worth. And the reason why it's referred to as total current assets is because they can do that within a 12-month period. All right. Now, if you look at the long-term assets, now here you've got more property, plant, and equipment. you have long-term investments. These are essentially assets that you can't really liquidate within the next 12 months. So these are regarded as longer term assets. But the total current assets, these are goods, these are inventories, these are cash, these are things that the company can have on hand within the next 12 months. Okay. So before we move on to total long-term assets, I need to know, do you guys understand the first part? So total current assets, these are pretty much inventory, things that businesses can have on hand within the next 12 months. Does that make sense? Am I making sense? Let me know, guys. Let me know in the chat. Let me know in the chat. Okay, so Pocket said yes. Pocket said yes. Anybody? Yep, all good. All good. So that's the main difference. Okay, so when we move on to the longer term assets, these are essentially property, plant. You can't necessarily guarantee that you can sell this within the next 12 months and liquidate. So where are we? So yeah, I'm a little bit nervous. I don't know why I'm nervous. I haven't done a live chat in a minute. But essentially, the total longer term assets are property, plant, equipment, long-term investments, goodwill, and intangible assets, and other long-term assets. So again, longer than 12 months. Okay. I don't know whether I'm making sense. Let me know in the chat whether I'm making sense. And I don't even know. Hold on. Let me get a piece of cloth. Why is man sweating? All right. I'm back. Am I making sense, guys? Haha, all good, all good. Okay, okay. Breathe, bro. Breathe. Yeah, I know. I feel like I'm doing a live on YouTube, but I'm actually with family. I don't know why man's sweating. But yeah, okay, cool. Whew, what's that? But yeah, okay, so let's go through it line by line. Now, property, plant, and equipment. One thing you want to make sure is that has this value as well as it been growing year over year. And why is the chart not? Let me refresh it. Okay, now the internet's gotten a bit slow. Apologies, guys. Apologies. Yeah, okay. Here we go. Okay, again. So Google, like I said, they have one of the best balance sheets on the market right now. And again, with their property, plant, and equipment, you can see every year that it's been consistent growth. And this is what you want to see. You're going to see loads of companies, loads of businesses, whereby sometimes it fluctuates, or even worse, it's going in the opposite direction. But when you're analyzing companies, analyzing balance sheets, has the property, plant, and equipment, has it been consistent? Has there been growth? And if the answer is yes, then again, that is very good. That's what you want to see. Now, long-term investments, so businesses as well. You always see Amazon, they invest in other companies. And again, Google also, they invest in longer term businesses or other assets that generate the company income in the long term. And some companies tend to do this more often than others. Google, they invest heavily. Facebook is another company that invests quite heavily in other businesses as well. And again, as you can see, year over year, Google have demonstrated great long-term investments that's bringing back money for the company. And then you have goodwill and intangible assets. Now, on some balance sheets, companies tend to separate goodwill and intangible assets. And if you look at Yahoo Finance now, right? So the balance sheet for Yahoo Finance, and let me zoom in on this as well. Okay, I'm just zooming in, guys. Apologies. I want to make sure you guys can all see it. Okay, so on Yahoo Finance, that's another platform that people use to look at the balance sheet. They separate the goodwill from the intangible assets. Okay, but some balance sheets, some companies like Macro Trends, they include it all as the same. And essentially, what your goodwill and intangible assets are it's it's a value that you can't necessarily measure, if that makes sense. So for example, when you look at Coca-Cola, for example, they consider their brand name as an asset. You know, the value of the Coke name itself, the value let's say a Mercedes Benz or a VW. You know, you've got their logo on the car, and that instantly adds value to the product. Okay, so you can have a same car with the same specs, but the fact that one of them is a VW and the other is maybe a Skoda, the VW car will be more valuable just because of the badge. So the goodwill and intangible assets, Warren Buffett calls them soft assets, because some companies pump that up a lot more than others, and that's how they measure it. Okay, so that's the goodwill and intangible assets. And then the next line, you have the long-term assets. And again, these are longer term assets. So again, not within the next 12 months. Okay. So the total assets is pretty much when you combine everything all together, the value of all of these factors here, that will provide you with the total assets on the balance sheet. Okay, so is it all good, guys? Let me know. People are saying I need to breathe. I know. I have no idea why I'm nervous today. But yeah, let me know, guys, whether that is making sense, whether you understand the total assets. Okay, it's good to hear. Okay, so cheers, Dit Row. It's good to hear what each line means, as well as what sort of a trend we're looking for within each. Most YouTubers have found are rubbish at this. Yeah, because I think this is why I love macro trends, because essentially it puts it into a bar chart for you. I mean, some people what they tend to do, they take these values and then they put it into an Excel sheet, and then it generates the bar chart for them. But macro trends does that instantly for you. If someone puts a company on my radar, straight away I'm going onto macro trends, I'm putting in the ticker, and then I'm seeing the growth there. It's pretty much evident. So if you give me a company, I look at the balance sheet and it's going the opposite direction, I won't be interested in that company. So that's the total assets. Now, moving on to the second part of the balance sheet, you have the total liabilities. And again, the total current liabilities, when you see current, it means 12 months. Okay, it means within the next year. Okay, so the total current assets is the value of what the company owes within the next 12 months. So you may have seen me on YouTube many times talking about the total current assets exceed the total current liabilities. And that's because if the company owes a lot more in their total current liabilities than they do with their total current assets, they're going to be in serious trouble. And this is really where companies got in trouble last year during the COVID crash, because they didn't have enough in the total current assets to exceed their total current liabilities. So essentially, with total current liabilities, if the company can't pay for their total current liabilities, they're going to be in deep trouble, and most likely are going to declare bankruptcy. So the total current liabilities include stuff like bills, your utilities. If you owe money to creditors, these are essentially the factors that make up the total current liabilities. And this is what you need to look at. Now, longer term debt, again, this is debt that's owed longer than a 12-month period. And Peter Lynch always teaches that you need to make sure that the total cash exceeds the total long-term debt, okay? Because that's an indicator that the financials of the financial health of the company is very, very solid. So total long-term debt, again, that's longer than 12 months, okay? All good. So let's see what you guys are saying. Okay, it's all good. So keep it. Yeah. Thank you, brother. Thank you, guys. It's all good. Perfect, mate. Thank you. Sounds gone. Can you hear me? Oh, don't tell me the sound's messed up. Guys, can you hear me? Someone said the sound is gone. Mic check, mic check. Can you guys hear me? Let me know in the chat whether you guys can hear me. No, don't tell me the sound is gone. Has the sound gone? Oh, no. Okay, you can hear me. All right, cool. Okay. Oh, it was a typo. Really? Really? All right. So, okay, sounds good, not sounds gone. Right. God. All right, guys. All right, let's get back on track. Okay. So, sound didn't go okay at all. Okay, cool. Yeah. Thank you, guys. So, now looking at the total assets, the total liabilities. So, when you add up the total current assets, the long term debt, the other non current liabilities, and the total long term debt, that will give you the total value of the company's total liabilities on their balance sheet for that financial year. Okay. And again, I prefer to see the assets exceeding the liabilities personally, especially if it's a long-term investment for myself. And I love to see balance sheets whereby the liabilities are going lower, but then the total assets are increasing because again, companies demonstrating strong financial health. But in Google's case, you can see the liabilities haven't been great. The liabilities from a year-over-year perspective, you can see from 2012 to 2016, very, very minimal growth, but they did take on a significant amount of debt during the crisis, and their liabilities level has increased quite significantly. So keep an eye on that. You want to make sure that you're looking at the total liabilities. All right. Okay, and now you have the retained earnings, and I won't lie to you guys. I don't spend too much time here. Your retained earnings is pretty much the amount of cash the company has once it's paid out its dividends. So again, the next thing I look at is the shareholder equity. Okay, and the shareholder equity is when you subtract when the total assets divided by the total liabilities will give you the value of the shareholder equity. And essentially, when you have a company where the total shareholder equity is increasing year on year, it means that the total assets are growing much faster than the total liabilities. And you find a ton of companies whereby the total shareholder equity is declining. And that's because the company are taking on more and more debt. And it's become quite common this year. Again, a lot of companies took on a lot more debt during the crisis. And but in Google's case, they've been fine. Okay. The stockholder equity has been going up year after year. And it's an indicator, once again, that the total assets are growing much faster than the total liabilities. And the last line of the balance sheet, you have the total liabilities and shareholder equity. And that essentially is the same value as the total assets. So if you look at the total assets here, you have 319 billion, and it's the same thing here. And if you look at it on the next line in 2019, it was 275 billion, and the total assets here was 275 billion and etc. So, okay, so that's that. Let me know if you have any questions, guys, and I'll tell you my checklist. Okay, I'll give you my checklist here, what I usually check for. All right, so let me see you guys in chat. So you guys are okay. You guys can hear me. I think it was a typo. Whoever said they can't hear me, it was a bit of a typo. So I should kick them. Next time I'll kick them out. I'm joking. Okay, so I'll buy Berkshire. Yeah, but hey Ali, welcome, bro. Welcome, Dan. Welcome, guys. Yeah, no worries, Navid, bro. I appreciate you for dropping by. But yeah, we've pretty much run through line by line of what a balance sheet is. And what I'm going to share with you now is my checklist. Okay. So one of the things you need to look for, number one, does the total cash exceed the long-term debt? Okay. That's number one. I got that from Peter Lynch. Next, I want to make sure that the total cash has been growing year over year. And in Google's case, you can see it has. The next line, does the total current asset exceed the total current liabilities? That's very important. Okay, so Connor asked, are the UK shares on Mac? No, no. Macro Trends pretty much focuses on US stocks, Connor. Okay, so Sukjit asked, why does a company like this have debt if they have, and some companies, so some companies choose to take on debt even though they have enough cash to pretty much wipe out their debt. They still do take on debt because, of course, think about it. When you're paying back your debt, when you are up to date with paying back your creditors, for example, it looks good to other companies. So if Google are in any, if Google, even though I can find it hard to imagine, if Google ever need to take out money or take out a loan, they have a good line of credit. All right. So some companies do that, even though they have enough cash on the balance sheet, they still prefer to take on debt, even though they know they can pretty much clear it off if they want to. Or hope that makes sense. Yeah, and again, so Shelb said it right there. They don't need to pay their debt off straight away. You know, you find a lot of companies who take on a lot more debt than they have cash, and then they struggle. And you know, when a pandemic hits, they're probably going to go bankrupt. You know, in most cases. So, all right. So, where was it? Okay, so yeah, next on the checklist, I always want to check to see has the total assets increased year over year. That's very important. And next, shareholder equity. So, like I mentioned, an increase in shareholder equity is an indicator that the total assets are growing much faster than the total liabilities. So you want to make sure that is growing year over year. And now let me quickly show you a bad balance sheet. So we are on AMC Entertainment. Okay, so that's a cinema company. Let's look at their cash position. So look at AMC's cash position. All right. Terrible. So I've seen a lot of people investing in AMC, and I wonder why are they investing in AMC? Because if you look at it, their cash position has been getting worse since 2013. You know, even before the pandemic hit and they had to close their doors down, their cash position has been getting worse. And if you look at their total current assets as well, that's doing a little bit better than their cash, but if you ask me to look at AMC, I look at their cash position and I've seen this immediately. I'm thinking red flag. That's a red flag for me personally. The total assets that's been going okay. And again, remember, total asset that includes the property, the plant. So with AMC, they have a lot of buildings for their cinemas, and that holds a lot of weight. But again, they also have a lot of goodwill and intangible assets, which they factored in. And what we find, some companies they beef up the goodwill and intangible asset value just to make their total assets look good. So even though sometimes you look at the total assets, you're like, oh wow, it's growing. You really want to look at the goodwill. How much of the total assets have they factored in as part of goodwill and intangible assets? Because again, remember, it's not really measurable. It's the value that they give on their brand that they have factored in to their balance sheet. So you want to look out for that. And then look at their shareholder equity. Again, it's been on a decline since 2017. You know, so would you invest in AMC, guys? Let me know in the chat. Do you think they have a solid balance sheet? Let me know. Would you invest in AMC? I certainly wouldn't, and I certainly haven't. But let me know in the chat whether you would invest in AMC based on their balance sheet. What are your thoughts? Do you think they have a decent balance sheet? Am I being a bit too critical? Let me know. Let me know. And another thing as well, guys, actually, I just remembered. So you may have heard like Tesla are now including cash. Tesla are now investing in Bitcoin. And I don't really know how they're going to measure that because the value of the Bitcoin will be sitting on their balance sheet. So are they going to create another line for, crypto? I have no idea. Or maybe they'll just include it as part of the cash. and cash on hand, or part of maybe their long-term investments. Not entirely sure, but that is quite interesting to see. So let's have a look. Let's see what you guys are saying. So like Manchester United, not now, invested at $4, and so so Musa took advantage of the pump. So okay, I love an underdog. Okay, no chance, especially at these prices. Too expensive now. Not now because of COVID. Dan's got AMC and the rocket symbols. So okay, maybe I'm being harsh. Okay, so clearly, some Dan would invest in AMC right now. Ali said it's too expensive, and just put the bomb emoji. So yeah, I mean, I personally think AMC have a terrible balance sheet. All right, just looking at their cash position, it scares me. All right, but again, it might be a great swing trade. Again, when you're looking at swing trades and when you're looking at day trades, it's a completely different story. But yeah, AMC not really for me. Okay, so Matthew asked if the total liabilities exceed the total assets, how much of a red flag is that for you? Would you do more DD or would you stay clear of the stock? Personally, Matthew, I would stay clear of the stock. Now, if you wanted to go in depth, you can look at the company's 10K. All right. So this is Google's 10K, which I had loaded up and completely didn't go through. But on the company's 10K, they go into a lot more detail and a lot more depth in comparison to macro trends. It gives macro trends kind of consolidates all of that information, but you can have a look at their assets and see why their total assets or the total liabilities may be bigger than their total assets. And it's sometimes because they've accrued more debt, they have more deferred revenue. Again, the longer term debt, they've probably had to take on a lot more than they wanted to. But for me personally, it's I wouldn't look at it. No, I wouldn't look at it. So General Electric hasn't had an awful balance sheet for a couple of years, but now they've paid off a lot of their debt and it's improving the last few quarters. So let's have a look at it. Let's take a look at it. So GE, all right. General Electric. All right, let's have a look. So again, I'm on macro trends right now. Look at their balance sheets. Okay, so this is GE cash. Let's get their cash. Come on, load when you're ready. Oh wow. Connor, are you sure? Are you sure about that? The cash has been getting worse. It's going in the opposite direction. Let's look at their total assets. Total assets as well have been going in the wrong direction. Is this a prank, Connor? Is this a prank or something? Total assets as well. Well, it's been getting lower. It's getting lower as well. But I mean, this is completely opposite to Google right now. Long-term debt, how's that been doing? To be fair, they have been clearing off their long-term debt. It's been getting lower as well, which is a good sign. And the shareholder equity, let's have a look at that. Shareholder equity is getting worse as well. So that means their total assets are growing much faster than total liability. So I've got a feeling Connor is pranking me by saying GE. Because right now, GE is even a better example of a terrible balance sheet in comparison to AMC. So let's have a look. So kick Dan. I can't kick him XP. Okay, so Connor said quarter by quarter. Okay, let's have a. But Connor, you want to pay attention to annually because companies might have, a good 2 quarters or a good 3 quarters, but you want to look at it from a year-over-year perspective. I mean, Peter Lynch always advises to look at the quarterly to get a better overview. But even if you look at it from a quarterly perspective, GE's cash on hand, it's still getting worse. Like, I mean, look at their recent, so that's their most recent quarter, significantly a lot lower than it was the previous quarter. And let's look at their total assets from a quarterly point of view. Again, it's getting worse, Connor. So you want to be careful with a company like GE because it's just getting worse and worse year after year and quarter after quarter. Even though the liabilities as well has been going down, but you want to see the total assets going in the opposite direction. Okay. All right. So G is revamping the company. They might be XP, but the balance sheet is telling me something completely different right about now. Balance sheet is this is not a healthy balance sheet. Um, let's have a look at Warren BR. Okay, BRK Berkshire. Right. So Warren Buffett, the granddaddy. Let's look at it from an annual point of view. Okay, where are we? Where are we? So let's look at Berkshire's balance sheet. Okay, so their cash position has been. Ooh, okay, so that's quite interesting. So Warren Buffett's company, their cash position is it's not predictable. It's really not predictable at the moment. You can see they had a terrible 2016, 2017, 2018. Then it improved quite significantly in 2019 and then 2020 once again. Their total current assets, let's have a look at that. It's okay. It's okay. I would say it's okay. I wouldn't necessarily write the company off straight away, but again, it's not as consistent and it's not as predictable as Google is. And let's look at their total current liabilities. How's that looking? That's more consistent than their cash and total current assets. So stockholder equity, is it going in the right? Stockholder equity is doing okay. So again, the total assets are growing much faster than the total liabilities. So that's very good to see. Would I invest in this company? No, personally, and I haven't. But all right, let's go. So, what about companies that are growing their expenses in R&D? Okay, so their balance sheet. Okay, take for example, their balance sheets are not always great. However, future growth might be good. How do you judge that? Again, so with that kind of company, and this is why next people don't understand Tesla. People are saying Tesla is overvalued and whatnot, and just because they are predominantly they're looking at the balance sheet, they're looking at the financials, and they're looking at the valuations. Where Tesla's currently trading at, and they're like, it just doesn't make sense. But with a company like Tesla, with a company like Palantir, they may not have the best balance sheet, but you're looking at the future potential, and it's very hard to measure that. Future growth, it's very hard to measure, and this is why analysts disagree on Tesla. This is why analysts disagree on Palantir. So yeah, there's no right or wrong way to kind of measure that. That's the tricky thing. Okay, so Manny, can you check PRDC? Okay, so let's have a look at PRDC. Is that the right ticker, brother? PRDC. I can't see that on macro trends. Is that the right ticker? Okay, so Connor's asking about Tesla. So Tesla, I said Tesla right now, people are arguing over Tesla for days. People just don't understand Tesla because they look at the balance sheet and they come to the assumption like, how is this company worth what it's worth right now? But look at Tesla. I mean, their cash position has been getting stronger and stronger. Remember what they have done? They did do an offering last year at some point, and they're just sitting on an amazing amount of cash right now. Their total assets. Let's take a look at their total assets. Growing. It's going in the right direction. Total liabilities. Again, it's going in the right direction. Shareholder equity. Again, significantly going in the right direction. So yeah, I think Tesla right now they definitely have a much stronger balance sheet than people are giving them credit for, but they did have a significant jump in 2020. 2020 was an incredible year for Tesla, period. All right, look at that jump. So yeah. All right. Okay, so GoPro's my baby. It's my biggest position in my growth stock right now. Let's look at GoPro. They do have a decent balance sheet now. Let's look at them recently. So GoPro, again, like I said, simple step. You look at the cash. How's the cash been doing from a year-over-year perspective? And as you can see, from 2019 to 2020, despite the shutdowns and everything, their cash position is starting to go in the right direction. Their total assets as well is starting to go not that good actually. their total assets is actually sort of decrease in 2020, which is again probably one of the reasons why after Q4 it had a deep sell-off. You know, a lot of people sold off GoPro position. Their total current assets though is looking good, is getting better. So from 2018, 2019, and 2020, we're starting to see a recovery. And this is why I call GoPro, you know, my recovery stock of 2021, because the balance sheet is starting to recover. You know, BlackBerry is the same. BlackBerry's had a terrible balance sheet, but they're starting to recover. And this is why you call them a recovery play or a turnaround play. All right. So BioLace, exactly, Dylan. So BioLace is exactly the same. BioLace is another company that they've had terrible financials for a couple of years, but the business is now starting to turn around. Okay. So people are telling me to ban Pocket. I can't ban Pocket. Okay. Let's have a look. So here, I don't think Macro Trends covers small caps, Dan. I don't think okay, actually it does. Turtle Beach. Let's have a look. So Turtle Beach, we've got ears and eyes, cash position. Let's have a look at their cash. How's their cash looking? Okay, so they had a solid 2020. Look at that. But how are they going to have for 2021? We don't know. But this is very, very good to see. It's a huge jump, though. A very, very huge jump. And so if this circumstance, I'll go into the 10K. I'll go into the 10K and have a look at why the huge jump, you know, and is it going to continue or is it likely to decline the next year? Again, total current assets. Let's see how they're doing. Total current assets is also starting to turn around. 2019 they had a great 2020 for here. Their total current, the shareholder equity. Let's have a look at that. Again, it's starting to turn around. So it had a great 2018, great 2019, and great 2020. So the total assets are growing much more faster than the total liability. So here, looks like they have a solid balance sheet there, Dan. Good pick, brother. Okay, so where does R&D costs show on the financials? So Sukhjit, research and development is on the income statement, and we are going to go through the income statement. But when you look at the income statement, you can see here research and development expenses. You find it on the income statement. Okay. So what percent increase year over year and quarterly would you consider good to invest in? Now, Musa, I like to see double digits, you know, over 15%. If it's a growth company, Peter Lynch says you want to look for 15% year over year growth at minimum. Any more than 15%, then that has my interest. So Pocket says long live Tesla. Yep. BlackBerry. Yep. So BlackBerry again is turning around. GoPro exposed. Hashtag GoPro it's true. So there we go. And long time. Okay. Yep. So BB is a great example of revamping. Yep. BB are turning around. They're a turnaround play. They were my turnaround play of 2020. And again, if you look at the balance sheet, remember income statement, we're going to do that another time. But here's the balance sheet. Let's look at their cash position. Where are we? It takes a while to load, for example. It's not good, to be fair. Total cash isn't good. Isn't good. GoPros are much better turnaround. It appears. And again, look at the total assets. It's getting worse. Total liabilities as well. It's not what you want to see. It's not quite a Google, and shareholder equity hasn't been great either. So BlackBerry right now, the balance sheet is not as strong as you would want it to be, and it's a much more riskier investment, as it were. What does it mean by? So what that meant, Pocket, the 40, I'm thinking for here, that was $40 million. Yeah, that was in millions, bro. Okay, so BlackBerry exposed. I hear you. So Nano Dimensions. Okay, I don't even want to bring up Nano Dimensions right now because you guys are gonna be like, oh, why did you invest in that? Nano Dimensions, they've got a great amount of cash, and that's because they've been they've been doing a lot of offerings right now. So cash is looking good for NNDM. Okay, or maybe not. You guys are probably exposing me right now. Total current assets, again, it's not great. Not great. Total, yeah. Okay, total assets has seen a bit of an improvement. Total liabilities, wow, it's getting bad. It's getting bad. So you guys are coughing. I can see Connor in the comments just coughing right now. BlackBerry exposed. Nano Dimensions exposed. GoPro's all right. GoPro's all right. So yeah, so Sonos, Sono is they have a very solid balance sheet. Would you still invest in BB? I'm already invested, Dylan. I'm already invested, but looking at their balance sheet, it's not a solid investment. Okay, it does carry a lot more risk than, of course, a company with a much better balance sheets. So yeah. Okay, so are you telling me I'm not going to sell BlackBerry? Not yet, anyways. Not yet. Not yet. But yeah, okay, shells. Yeah, you guys are laughing at her. Okay, so more to exactly. So there's more to a business. Yeah, a lot of research is needed before putting your money somewhere. GoPro especially is looking tasty recently, and that pretty much sums it up. Okay, so a company might not necessarily have the healthy balance sheet, but you got to look at the business, and also earnings is I believe earnings is tomorrow, so it'll be really good to see how they perform for full year 2020. Okay, so yeah, there we go. BB's in the same category as Helion. Oh no, Matthew, don't. That's a shot. That is a shot. You can't put BlackBerry in the same category as Helion and Nikola. That's below the belt. That's below the belt. So earnings this week. Yep. So yeah, I'm looking forward to it. XP. I'm looking forward to it, bro. And money exposed. And all right. So yeah. So guys, that's pretty much it. If there's any, if you have any questions, let me know. Again, just DM me in the Discord. I appreciate all you guys for turning up. Thank you for kind of, calming me down. I don't know why I was nervous. I've done many of these live streams. I have no idea why it got hot in here all of a sudden. But yeah, it's all good. I'm amongst family, so it's all good. It's all good. Okay, so Musa, last question. Musa, why does a lot of stocks lately fall even though? Okay, so that's just the current market we're in, Musa. The overall sentiment of the market, as you know, is bearish. So even though companies come out and they report great earnings, solid, they've improved their balance sheet. Like DSGT is an example whereby they improved their balance sheet. But look at it. I mean, I'm down like 60, 70% in DSGT right now, even though they reported a great balance sheet. Sometimes it's just the overall sentiment of the market, and it's one of them ones where AMD reported great earnings, stocks down. Celsius, great earnings, stocks down, and it's just the overall sentiment. And in my opinion, in my view, as most of you already know, if a company has a great balance sheet, great financials, and the stock is down, that's shopping time. Okay, it's shopping time for me. It's shopping time for me. So yeah. Okay, cool. So I appreciate you guys. Love y'all, guys. Thank you so much for turning up. And yeah, we'll get ready for part 2. But yeah, appreciate you guys. Take care. I'll see you in the Discord.